Hello again, and welcome to the fifth session of this rapid fire series on technology stock investing with one of Silicon Valley's greatest insiders, Mr. John Markman. In case you haven't seen John's bio, he's an award-winning financial journalist. He's the co-founder of MSN Money. He's the best-selling author of a book that predicted the tech wreck. He's a former hedge fund manager, and for many years he's been a tech stock picker with a batting average of 930 out of 1,000. And in each session, we've hit you with a tough question from our audience of diehard skeptics, myself included. So here's the next question, John. Are you ready?
Sure, go ahead. Shoot.
You're talking about a sweet spot, and this is a spot after an IPO. You say anywhere between 3 months and how many months? 16 months?
3 to 18 months.
3 to 18 months. So now that's a 15-month time range. Help me here. I mean, how am I supposed to? How are you going to pick the spot in that 15-month period? What's your method here?
Well, that's sort of the secret sauce, which I do share with readers. Typically you're looking for a company that's gone public. It's probably doubled, or it's probably up 50 to 100% over its offering price. So if it's offered, let's say, to insiders at 20, maybe it goes public, and its first trade is 40. What we're looking for is for that excitement to die down. So my experience has been that after about 3 months, the excitement wears off, and you can usually buy these stocks for a discount of about 15 to 25% off of that initial price. A great example was Splunk, which is a leader in a space called big data. It went public with a lot of hullabaloo in 2012. I'm at 15, and its first trade was at 40. And I told people this was a great company, was starting a big new category that people were going to get very excited about. But I told them to my readers to wait for it to come down a bit, and we were able to buy Splunk near the bottom of its trading range at 35, and we've held it ever since.
Let's talk about this trading range for a second. Let me focus in on that. So, are you saying that in this 15-month time zone that you're talking about, that the stock establishes kind of a sideways trading range,
Sure,
typically?
sure. As I say, a stock might be sold to insiders at 15. When I say insiders, I mean like institutions at 15. The first trade might be at 40.
Okay.
And then the people who let's say bought at 40 might wait for it to go up to 45, but it doesn't. Instead, it goes down to 38 or 37, and then they get frustrated, so they start selling. And it'll go down to some level at which institutional investors, professionals realize, all right, this is where the fundamental value is. And in the case of Splunk, it was right around 35. So they come in and buy at 35, and the stock holds there for a while, and then it moves back up. It usually will go back up to the initial price of around 40, and it'll stay there for a little while. And then people who bought it at 35 will sell it, and it'll come back down to 35. And it'll do that a couple of times. It'll make these round trips between some level at which the professionals are willing to buy it, and then some level at which the short-term professionals are willing to sell it. At some point, we can recognize the bottom of that range, and as individuals who are not, in on the stock, can say, all right, well, 35 is the bottom of the range. It's been bought there several times. Let's buy it there. And that's probably the safest place to buy it. Another place to buy IPOs is after they break out of those ranges. So if it travels between 35 and 40 for a while, and then one day it breaks up to 42,
Hmm.
very often that's a fantastic place to buy it. And although it looks like you're buying at a new high, and you are, very often that is the point at which these IPOs really begin to take off.
Well, that gives us a pretty clear vision of the timing. You have a trading range. You could buy it either at the bottom of the trading range, or you can buy it, as it's breaking out above the trading range. You've also given us a pretty clear time frame to look at. So I think that's very helpful in terms of getting the timing right. Thank
Yeah.
you very much.
Sure, and I would also mention one other scenario, if you don't mind.
Sure.
When Facebook came public, everybody knew that it had come public at a completely ridiculous valuation,
Hmm.
in a valuation where investors really could not make money. if they bought it on the aftermarket. And it reminded me a lot of Amazon.com. When Amazon came public in, I think it was 97,
Mhm.
98, it had the same experience. It was brought public at a really, really high valuation, and ultimately it fell by half from its initial IPO price. And I thought that that could happen again with Facebook, and I told that to my readers, and we were able to buy a Facebook at half off, and then once it moved back up to its IPO price, obviously it was already a double, and then as it broke out of that initial range, it's doubled again from there. So in that case, both sides we played both sides of that fence.
That's great. Now, judging from the thousands of people who've already registered for your big gala event on April 8th, John, I think a lot of people like what you're saying here. You're going to fly down here to Florida, right?
That's right.
And that's going to be April 8th. Can you give us a kind of a quick preview of what you're going to be talking about?
Sure, Martin. There's three things I want to cover. First, I want to lay out my scenario for the most powerful tech megatrends of our time.
Sure.
Second, I'm going to name some of my picks for tech stocks to buy now. And third, I'm going to open enrollment to my new trading service, which is called New Tech Superstars.
Well, great. I look forward to it. And as I said, a lot of people have already registered. Below my screen right now is the link for those who have not yet registered. So please take advantage of that now. Thanks, everyone. Our next and final podcast is going to be this coming Saturday. But don't forget, the big event is coming this coming Tuesday, April 8th.